Thank you so much. We do greatly appreciate it.
All right. Are you able to hear me? Hello, hello, hello. Mic check. 1, 2, 1, 2. Can you guys hear me out there? Yes. Okay. Thank you, Fast Eddie. I don't know what was going on there. Thank you guys. I appreciate that. Um, one of those days, I guess. Loud and clear. Great, 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 great. Okay. So as I was saying, well, I guess you didn't hear anything I've said so far today. So let me just rewind. Thank you guys for tuning in. Thank you to Vincent for starting off the show with that first super chat of the day. Um, but yeah, when I started to create this topic, I did not know, of course, the state of what we were going to be in with all of the war related headlines and everything that is going on. And we are about to be on another wild ride for the next few months related to what is going on with this administration. So, before we get into our topic, talking about just, stocks and ETFs and all of that, I wanted to touch on that situation. And I'm getting a phone call, and they're going to have to wait. Let me let them know that I am live. Um, unless this is something related to the live. Okay, sorry about that again. So, all these headlines, all the conflict that's going on, it's going to I don't know if I could really call it short term because statistically when we're going through something like this, we're going to kind of be on a downward trend for the next few months. So, we have to be ready for that. And you some of us consider that short-term volatility depending on where you are in your investing stage. It's going to be hard, but hopefully us being together, having these discussions, staying informed will help you to be able to deal with what we're going to go through, and what your portfolios are going to be going through. So defensive stocks may benefit. Energy and oil prices may go up drastically. I posted that to my community wall earlier today. I happen to heat by oil in my homes, and it's just I have to be ready and aware as to what potentially can happen. I put the worst case scenario on what could happen with certain prices. And, that's what I think we should all be prepared for. Now, the long term market performance typically recovers strong after we go through a stage like we are going to go through because of what is going on with these war related issues. So not so much with the tariffs. I've been saying, that was something different. COVID, going through that situation related to the stock market, that was a different circumstance. But war that we've been through, the Gulf War, World War II, we've seen how the S&P 500 and just the resilience of the stock market afterwards. So this is just another situation where we have to be ready for the volatility, and as a smart investor, look at it as a time not to panic and potentially just focus on your strategy that you've created, stick to it, potentially invest even more. I was looking at the crypto market like 4 o'clock in the morning, and I did not have any money in my crypto investing platform that I primarily use for my XRP and uh, Bitcoin. I do my FBTC over on Fidelity. I didn't even look at that today to see if there was an opportunity if I could invest in that on Sunday. But, I'm going to be getting ready over not necessarily this week, but I'm going to be watching. And as things trend down, I'm not going to be here trying to perfectly catch the bottom, but I'm going to be keeping an eye out on, as things trend down, which, like I said, historically, typically, this is what is going to happen over the next few months. I'm going to be mindful of it, set my alerts, and be going about investing the same strategy that I've had in place, just like I always do. If there's something that I want to put additional, I'm still in that building stage. So it's pretty much everything in my portfolio I wouldn't mind having more of. So that being said, I'm going to have my alerts on. And if there's an opportunity that I see and my budget allows for it, it aligns, I'm going to be investing heavier. So let me take a look at the chat. Do I think military stocks will go up on Monday? I don't know how quickly things are going to react, but I am going to touch on a few defensive stocks today, and those were already in my plan of what I was going to do in this live, even before things made this turn. But I don't know. I don't know. Keep an eye on it. If there's something that you have in mind, have your alerts on. If if you're able to buy full shares, put that order in at what price you would like to pick up those stocks at. As far as how and when things are going to react, I don't know. I'm just going to be ready for it and be watching and still investing as things trend down, because like I said, I'm not trying to do things to perfection here. Just to the best of my abilities with what I know, what I've experienced, what I've been working on over the last few years as far as building up my skills. I may not catch the absolute bottom, but I'm not going to be on the sidelines waiting and let the entire opportunity pass me by. So, guys, Nightbot is working again. It hasn't worked in months, but I got it back again. So guys, make sure to give the live a thumbs up if you have not already. And let me take a look if there's any other, let me look up here, sorry, if there's any other questions. All right, so on to the regular topic of the day. If no one has any comments related to the war-related issues. Let me see what Fast Eddie is saying. One of the Facebook groups I belong to, someone just posted they think oil will surge Monday along with gold. Yes. Yes, I agree. There is going to definitely be an impact to oil and gold. I don't know if it came through earlier when I was having those audio issues. I had posted to my community wall the worst case scenario when it comes to the price of oil on my community page earlier today. Hey, David, thanks for tuning in. Yeah, guys, chat with Eddie, Fast Eddie in the chat if you have any insights on that. But yeah, I definitely agree. The crypto market looks crazy. And yeah, I don't like I was having some audio issues at the top of the show. So if I repeat myself, I'm sorry, but I'm trying to think what was I saying when you guys were not able to hear me and I didn't know. Uh, but yeah, Bitcoin, under 100,000, XRP under $2. I know this is not the direction that we want things to go. We're ready for these things to shoot up. We're ready for XRP to hit $3, $3.50 and above and go that direction. That's what we've been wanting. And Bitcoin getting to 100,000, holding for that a length of time, going up to 110. Yeah, I know we want more of it, but that's not what's going on, and we have to look at it. If we are long-term investors, we have to hold tight, potentially add more if it is something that you believe in for the long term and you're not done building your position. So just think of it like that. That's how I'm going about navigating the ups and downs of the stock market. So now I wanted to talk a little bit about stocks versus ETFs. But I will be keeping an eye on the chat and just taking breaks to talk about anything that you guys are chiming in with. Because like I said, this topic was just a regular topic that I had plans before, everything took such a drastic turn. So for me, if you watch my channel, if you've seen what I've been sharing, you already know that I'm a person that does both stocks and ETFs, but we're just going to talk a bit about what individual names, individual companies, as well as ETFs might be a good fit for your portfolio and kind of why I do a mix of both. Now, we're also going to talk about some of the Vanguard ETFs that are top performing in comparison to some of our favorites and Warren Buffett favorites that we might be considering to add to our portfolio. Never a suggestion, anything that I share for you to buy, hold, or sell. I'm sharing my journey. I'm just trying to keep us informed, give you information so that you can do your research and potentially do better when it comes to building up your portfolios. So when it comes to stocks and ETFs, which ones should you invest in? Okay, so I must admit, and I have, I can share specific examples. When it comes to my portfolio, my stocks offer a higher reward potential. My individual stocks, they do the share appreciation, my growth has been more when it comes to my individual stocks. But with that, it comes the responsibility, it comes the higher risk of the volatility that may occur. But that is why I kind of have a conservative portfolio full of companies, names that we are very familiar with. I don't put much things that are speculative into my portfolio. And if I do, it's definitely not going to be under the category of investment. For me, it's going to be a trade or something that is going to have a stop loss on. And it has not, in my mind and in my portfolio, graduated into being a long-term hold. But ETFs, I incorporate them because they give me that built-in diversification, lower risk. You can be more hands-off. You know, you're just going to get that steady monthly or quarterly dividend, most likely quarterly. And it's ideal for larger positions, ideal for long-term investors, beginners, anyone who wants to get started in investing. I often say, like, even if you know nothing about investing, start off with the S&P 500 or a VTI, a total US stock market, I don't think anyone should have to wait on getting started in investing. Get started there, and then you can do your research and figure everything else out after. If you know how to set up an account, know what type of account you want to have, for example, a Roth IRA, what are you going to be investing into? Once you know that, I think anyone can get started with a basic ETF or mutual fund that tracks in that way, that has a low fee associated with it, that expense ratio that people are always joking that I'm a stickler about. But you can definitely from there, while you're doing that basic first step, from there you can be doing research and be getting ready to learn and grow and build from there. But I don't think anyone should have to wait. And I also say this because I've had people comment that, oh, Lisa, when I save up $1,000 or a certain dollar amount, then I'm going to get started with investing. If you know that money is earmarked for investing, why are you waiting? Invest it as you have it. I'm not one that's going to hold on to my cash if I know it's unless I'm it's cash on hand for the potential, like I mentioned, that we're going to be having over these next 3 months. If that's the situation, that's one thing. But just holding on to it just because I'm trying to build up my cash balance, no. I'm always going to be investing it because I want my time in the market. And so that's what matters to me. I'm not trying to wait and buy full shares. I can buy a tenth and just build that way. I can do $10, whether it's share size or a dollar amount. I'll work on my small amounts and build from there. So ETFs, they are appealing and easy for investors because, like I said, if you don't know, if anyone here doesn't know what an ETF is, it's an exchange traded fund. It is a basket of stocks. It is multiple hundreds, sometimes thousands of investment choices that you get by just buying this one particular fund. So low risk, find one that has a low expense ratio, find one that gives you exposure to technology or semiconductors or dividend paying investments, whatever it is that you are trying to build up into your portfolio. I am sure that there is an ETF out there that will give you that exposure. If you are not ready to pick those individual stocks. Thank you, Rod, for tuning in. No problem on that typo on my name. We know what you mean. And so what I've already mentioned with the ETFs, it's not direct exposure into that company. So you have less control. You're just buying the whole basket. You'll have to, if there is an adjustment to that dividend payment or whatever, you don't have control over how you can navigate things. Your returns are going to be slower but steady. And you're just investing into an index, for example. So you can't be out there feeling like I did it, like I chose Nvidia at such a low cost and I've been able to ride it all the way up. But like I said, I do a mix of things because I want to have stability mixed in with those long-term proven blue chip stocks that I've decided to incorporate. So guys, if you haven't already, make sure to give the live a thumbs up. And thank you again to Vincent for kicking off the top of the show. Even before I think he could hear me talking, I was having some sound issues at the beginning of the show. And Vincent came in and gave me my first super chat of the day. Appreciate it. So when it comes to those individual stocks, I am a person that kind of keeps a tight portfolio, a portfolio of names of companies that you probably know all of. So when I'm not that worried, I'm not going to put anything that into my portfolio that's going to give me any worry. Let me start there. I I just want that steady growth. I keep my eye on my investments. It's not like it is like it was prior when I got started with my 401k. It was just, target date funds, and that's it. Nowadays, when I'm picking these individual companies, I'm ready and I'm prepared to take on the responsibility of being on top of it, potentially adjusting my portfolio if needed. But, I know what my goals are, I know what my standards are, and I will be willing to cut things from my portfolio that are not in line with my particular goals. But I try to do the research ahead of time because I don't want to constantly be having to sell and rebalance. I want kind of a sleep well at night, be able to hold long-term portfolio. So that's what I've been focused on building. And you have to have patience, but I don't think that I have any fear anymore when it comes to investing, because I did a poll a couple weeks ago, and I still the questions was like, what's holding you back, or what obstacles do you have when it comes to investing? And a high amount was, fear of losing all of your money. And when it comes to my portfolio, in the past, I have had some bad experiences. I did invest into things that have gone down drastically, but now this would never happen to me again, because going forward, I know how to use a stop loss. I know how to be mindful of the news and keep an eye on things. And if I see a particular investment dropping drastically, I'm going to have a standard and set that for myself and cut my losses before it's to the point where, I'm never going to be 80 or 90% down in an investment going forward, because I'm a different person now. These features are here. It's 2025. We can set up automatic investments, deposits, as well as having a plan in place. If I'm out and about, if I'm driving, driving my car, if I'm at my daughter's school, whatever it is, and my investments are dropping, that stop loss feature in there is going to sell it for me. And the next time I get a chance to look at my phone, I might be surprised, but that's okay, because I made that plan, I put that in place, and it is what it is. And it's the same thing when it comes to investing. I've had orders that I've had sitting for a while in my investment account. I don't, sometimes I wasn't able to let them sit for months, but at times I was. And then when it came down to that price, usually a price that I never really thought that would come around again, or just slightly and under where I thought it could go down to, and my order fills. So at the same time, I could be dollar cost averaging, building up the position, but have that, that put that order in there and see if it fills. And it's happened a few times. But my one obstacle that I have with that is, while the order is sitting, you can't use that cash balance. Your cash balance for the order to fill is then tied up. So there's been times when I had to let my order go because I wanted to continue with my dollar cost averaging. But right now I have a good amount of cash in my taxable account to be able to make a plan for the next few months when it comes to this. But I'm definitely going to be setting my alerts, being mindful, as like I said, with this war situation, and knowing historically what will happen. I'm going to be ready for it and be making my plans and sharing with my communities as to what I'm doing. Or if I'm not able to invest in everything, but there is a good quality stock that is at a low, I'll send out that alert too, just to keep everyone informed. So stocks, higher risks, more volatility. You need to stay informed, with the earnings calls and potential lawsuits and things that could happen. CrowdStrike, if you guys remember a few months back, CrowdStrike, when they had their issue, think it was CrowdStrike. I hope I'm not saying the wrong thing, but it caused disruption to the airlines and the hospitals. We couldn't swipe our card at the gas station. So things like that are going to drastically affect a stock's performance. But we have to be ready for that. And let me take a look at the chat. So my worst decision was investing in Open Door stock. It literally dropped 50 cents, 50% the next day and never recovered, never again. Yeah, Stuart, I'm sorry about that, but I hope that didn't turn you off to investing. I've had some bad choices that I've made too, and I wasn't aware to have my stop loss on. There are gains that I should have reaped more of the reward of being in certain investments. I was sharing the other night on a live that Jaguar Health was one of them. I bought it at $1 and it went up to 4. I'm not sure exactly, this was a few years back. I'm not sure exactly at what point I sold, but I know the way that I didn't have my plan set in place the way that I would today in order to capture the majority of that run up that they had in Jaguar Health. It's a pharmaceutical company. So I'm assuming at that time they must have gotten, approval for a certain drug or something very specific to what was going on with them caused them to shoot up. And so, but as you live, you learn, and I'm here sharing what not just what I'm doing right today, but I want to share with you guys the mistakes that I made in the past, so that you don't have to necessarily you can take from it and hopefully not make the same mistakes that I've made in the past. So yeah, it wouldn't happen again. I know, I was touching on when you sell your stocks in less than a year, the tax implication, whatever it is, if you don't want your investment going down by 50%, if that is outside of your tolerance, and you don't want to gamble that, and know, and with the fear of is it going to come back, then you have to make your choice and make your plan from the start. And a charge point is another investment that a similar situation where I should have cut my losses sooner and I didn't, but it wouldn't happen again going forward. And I hope you guys are understanding what I'm saying, so that you can incorporate this if you're not just sticking to your ETFs and the big names like Microsoft and a Google in your portfolio. If you are dealing with smaller companies, things that are speculative, then there are ways to mitigate your risk so that you're not in the situation like I'm sharing with ChargePoint, for example, or what Stuart is saying with their Open Door stock. So I will never invest individual stocks again unless it's something really bland like Procter and Gamble. Otherwise, I'm sticking with low cost ETFs. That's a personal choice that you've made, and that's the right thing for your portfolio. I'm still doing a mix, but I would say my mix and your mix would probably be similar. A company well established, these dividend kings, something that you don't have those worries about going forward. So thank you guys for chatting and sharing your experience. And, I love to see that. And I'm sure it helps others that are on this journey to have confidence and to know that we've all been there. And I appreciate that. So now back to defensive stocks. Now, someone mentioned asked earlier in the show that I think if they were going to go up on Monday. Yeah, I don't know how quickly things are going to be affected. Looking at the crypto market is just completely red. but I'm okay with that because when it comes to crypto, that's another element. I think the title of this live is stocks and ETFs, but I do incorporate crypto into my portfolio also. But you have to create the balance that's right for you, for your comfort level, and that may evolve because, like Stuart is sharing, at one point maybe they were having their portfolio more packed with those individual stocks. But they're not turned off to investing. You still know the potential of investing, but at the same time, you've made adjustments on the direction and the way that you want to go about it. So guys, make sure that you give the live a thumbs up if you have not already. Let's take a look at the chat. So Stuart, I'm thinking along the same lines. I'm going to keep Maine and O and a few others. Okay. That is Rod is sharing about the same kind of building that safe uh, portfolio that you're not worried about 50% or more swings potentially from your investments. I'm always looking for the next dividend king. I only use about 5% of my portfolio for that type of thing. Okay. Yes, we have to keep our losses small. Okay. Vinny is sharing an investment that I am not familiar with, UVXY. Okay. It can offset your losses. I'm not familiar with what that is. Hi, Nija. Thank you for tuning in. Stuart, Maine and O seem solid. Yes. O, definitely both for that steady dividend. I have both of those in my portfolio. And I have to remember that Realty Income, ticker symbol O, is one that I added for that dividend because, yeah, the growth has not been there, but Maine has been able to give me both, which makes me smile. So let's see. What else were we going to touch on today? Okay, so the defensive stocks. Someone earlier had put in the chat, I think it was Fast Eddie, so I think they're going to go up tomorrow. I said, I don't know how quickly things are going to shift, but I wanted to touch on, the global tensions rising, and defense is one of those sectors that can benefit regardless of what's going on, but especially now with uh, long-term contracts and things that may be occurring related to the current global situation. So, three stocks that I was looking at in a particular article were Lockheed Martin, that's ticker symbol LMT, which has been a consistent performer, strong dividend payer, something that you may want to consider. Two others are RTX Corporation. They are involved in aerospace as well as defense, and Northrop Group, which is ticker symbol NOC. So they are a cyber defense company. So satellite systems and different things related to that. But these are just a few stocks that potentially you might want to put on your watch list in order to give yourself exposure to that defense stock sector if that is something that you want to incorporate due to the current market conditions. So if you're holding a lot of tech heavy ETFs, that's another way defensive stocks can give you a little bit of diversification, and potentially some stability of something that could be growing in your portfolio while other things are on the pullback for a few months. But at the same time, you have to make that choice for yourself if you are a long-term investor. I don't go about incorporating things like that into my portfolio very quickly because I think, is this something that I'm going to want to hold on to for years? And personally, that's what I focus on incorporating and building into. So let me see. I'm looking at my phone as though I don't have the comments here. So I need to add more to my gold position. Is that what you're sharing there, David? MSTY pays 7 to 12% monthly, over 100%. Okay. Yes, there are some strong dividend payers out there, but you have to know, pick the one that's right for you. Everyone's, tolerance and goals are different. So do your research. Take a look at the chat if anyone is sharing anything that you might be interested in. Palantir, I do not have that in my portfolio. AMD, I do not have that. There's many quality, even a Walmart or a Costco. There are many investments. I can't invest into every individual company, but there are great companies out there that I wish I had in my portfolio, as opposed to some of the ones that I have given a chance to, and now are just waiting for my chance to cut them from my portfolio, or basically not much in that category. But let me move on. Let's see. Fast Eddie, I'm definitely watching Palantir very closely. Okay. Yeah, I've only really traded Palantir in the past. I never started a position to hold on to it for the long term. Okay. All right. So, guys, make sure that you give the live a thumbs up. Thank you for checking in. I'm Lisa J. Stocks, and here we talk what's built into my name. We talk about stocks, crypto, ETFs, as well as saving and investing, all things related to money. So, if that is content that you enjoy, make sure to uh, subscribe, like, hit that notification bell, set it to all so you can keep up with all of my videos and live streams. And consider joining channel membership and supporting the channel in all of the ways. So, Stuart, thoughts on JEPI, JEPQ, and SPYI. So those investments, I was looking at them, someone had just asked me in the Discord what my thoughts were. And I think that those are good options for people that don't want to do options contracts and they want that, steady dividend. But you have to make a choice of what you want. Is it growth? Is it dividends? I don't happen to have any investment into those, but I know that they are strong dividend payers, and I've incorporated more of what other people have touched on today: the Main Street, the Realty Income, SCHD, those type of investments. I have. And I think sometimes I don't want to say I'm held back, but I like to get my position size built up. So it takes me time. I'm just not, I want to have my share size built up. So I don't often add new things in order to get started with. So like SCHD, it's only because of the split that has gotten me over 50 shares. But my positions are still rather small, and I have other things that I'm concentrating on. But yeah, I think that those are all quality investments depending on what your particular goals are. Now, I think all of those are in uh, David's portfolio. Yes, JEP, he's saying JEPQ and SPYI are two of his favorites. Yes. Okay, so investing with Rod is sharing that he has these in his portfolio because the options wear him out in a bad way. So it's kind of your simple way to get that exposure without having to do them yourself. And I think Shalise, Mommy Trader, chooses those type of investments for the same reason. I have been still doing options pretty much on a weekly basis, unless I have like a lot of meetings or I know that I'm not going to be able to give the attention to it that I want and need to. But right now I've been in a place where I've been doing options pretty much on a weekly basis again. I'm looking to reinvest, not cash out my dividends. I think a lot of us are. I'm definitely in that same place with you, Stuart. Um, okay. So, all right, we touched on some of those investments and defensive stocks. Let's see what else do I have here. Okay, so Vanguard ETFs beating Warren Buffett's pick. So, if you guys, I've done shows about Warren Buffett's portfolios before, but a majority or a good amount of his portfolio is into the S&P 500. I don't know why. Well, I mean, he's not us, the regular retail investor. But let me touch on this for a second. When you make your investment choice, make sure that you are uh, doing comparisons of things that give the same exposure. For example, we have SPY, VOO, and SPLG. So all three S&P 500 investments. But as a regular retail investor, as they call us, I would definitely be going with a VOO, which has an expense ratio of 0.03, or SPLG at 0.02, because I'm going to have the liquidity. It's with a reputable brokerage company. I think it can suit my needs. I don't need to invest into SPY, which has a 0.09 expense ratio. So take that into account in whatever you're doing as far as your investments, especially when it comes to your retirement account. Really dig deep there, because that's usually one of the biggest positions that we build. And that's, and that's going to be building for decades potentially. So I don't want anyone to be losing money there. So now back to Warren Buffett. Yes, he has a significant investment into VOO, and like I just touched on, it's a low cost, gives you that broad market exposure to the S&P 500. But I'm going to give you three other Vanguard ETFs that are beating that currently, that you might want to mix in if you are a person like Stuart that has evolved to having ETFs, maybe a mix of different ETFs instead of those individual stocks. So they are VGT, that is the Vanguard Information Technology ETF. Tech focus, again, going to give you those probably same top names that have that high market cap that you're going to get in the S&P 500. But because it's all technology, it has been beating the S&P 500. And then we have Vanguard Healthcare ETF, which is VHT. And this is a good investment for during recessions, and can give you extra exposure to healthcare if that's something that you are looking for. Like I said earlier, there is going to be an ETF that gives you every type of exposure that you're looking for, but take the time to do comparisons to make sure that you're getting the right fit for you, and as far as what you're getting exposure to and that expense ratio. And then another one that is beating VOO is Vanguard's Consumer Staples ETF, and that is ticker symbol VDC. So slower growth, but in a recession, these are things that people are probably still those basic necessities. What do we have here? Coca-Cola, Procter and Gamble, those type of things that you're not going to be able to eliminate out of your weekly or monthly spending. Those things that are kind of be a constant, even if we are in a recession. So, like I said, find what fits into your goals and build from there. And it doesn't have to be individual stocks, never that. Um, so, as I was saying earlier, anyone that's just getting started with investing, you don't have to wait. You can get started and still learn whether it's books, whether it's watching videos, whatever it is, you can be in that learning stage and invest into the S&P 500, invest into the total US stock market while you're trying to figure things out. Just get your foot in there. Don't be sitting on the sidelines. Just get started investing and getting your time of your money being in the market. So just take a quick look at some messages. All right, so what else do we have here? Berkshire Hathaway started off as a textile company. Okay. Let me see. All right. So, guys, let me know if you have any questions or comments or what your thoughts are on how you're going to be navigating the next few months with the market conditions, with the potential of this war and back and forth, and how it is going to be impacting us. Nija, let me take a look at what you are sharing. Invest in your 401k with a match up to the match. If it's is all up to you, you can do as a beginner. Get comfy with that while learning and growing. Yes, most definitely take advantage of your 401k. Whatever you're contributing, as well as what they potentially may be matching, and work towards getting that up to 15%. I'm curious what's going to happen when the futures market opens tonight because of this. Uh, Futures, I'm not familiar with futures at all, but uh, overall, historically, like I was saying earlier, this is something that we can reflect on, and we know that we are most likely going to be, if history repeats itself as it usually does, we're going to be in a downtrend for 3 months. And then, usually the year after something like this, there is a strong recovery. So we just have to um, be ready for it, and hopefully you have money on hand, cash on hand, so that you can continue with that balance with what we're dealing with the tariffs and potential increase in costs in that way. And then the stock pullback and wanting to invest heavier, I hope that we are able to reap the rewards of the situation and move forward and come out of it more, like they say that recessions make millionaires. Now, and I know most of us literally are not going to be able to achieve that, but at the same time, whatever our budget is, I want us to go through these times and come out on the other side of it better than where we started. And that's been my goal as I've been learning and growing and evolving when it comes to my investments and building my portfolios. So, thinking back to 2008 and just different time frames, even 5 years ago with COVID. I just going forward and thinking about the opportunities that I let pass me by. I'm just moving differently, and I know I've been through it, and I was fearful at the beginning of when we went into lockdown and all of that because of my job situation. I wasn't sure if I would have been laid off. I was not laid off at that time. I was working remotely for a long time. My earnings was not very substantial, so I was getting some of the stimulus money. And I could have invested more, but I was fearful and holding on to the cash because I didn't know. But in retrospect, I would have invested more. And then if I needed to, if it really came down to it, I would have rather sold some of my investments. But it hasn't happened. It didn't happen. It doesn't ever seem to happen. So going forward, I will be more open to investing a little more heavily because I seem to always be able to make it through and find that balance without having to tap into my investments. So Rob is sharing, be fearful when others are greedy, yes, and greedy when others are fearful. That is a Warren Buffett quote. Let me just take a look. I let opportunities pass me by too, but I'm on it now, Lisa, most definitely. That's all we could do is, when we know better, do better. Let me see who else is here. Isaac. I think the current geopolitical landscape will cause a lot of volatility in stocks selling at deep discount, good for traders and value investors before asset prices rebound from this Iran news. I agree with you 100%, Isaac, and that's what we're talking about today, getting ready for that. And really the topic of the day was stocks versus ETFs, but I had to start off by talking about the situation that we are in because we can I'm not here trying to time it perfectly, but over the next few months, there should be a downtrend, and we can do our best to take advantage of that. And well, for me, it will probably be related to options trading as well as investing in order to take advantage of the market pullback in general. So thank you guys so much for chatting and tuning in today. So I am live every Sunday, 3 p.m. Eastern Standard Time. And I put out videos throughout the week, videos, shorts. You can follow me on IG. But every day on some platform, you can be able to connect with me, see different things that I'm posting and sharing on a regular basis. So, guys, let me know if you have any other questions. My portfolio is heavily with ETFs. I like the broad exposure and dividends. Yes. You are not the only one who has shared that today. Thank you. And I'm glad that you are sharing this to let people know that we don't have to choose individual stocks. It's okay to just pick an ETF that fits into what you want to have exposure to, get those steady dividends, reinvest them, and just be able to compound our growth in that way. So, a brother of a certain age, thank you for tuning in. Yes, guys, make sure to give the live a thumbs up. Let's see. Yeah, we got 45 in the chat right now. Can we get the likes up? I subscribe. Looking forward to hearing more from you in the future. Thank you, Rob. Appreciate that. So how did you discover the channel today, Rob? Was I in your shorts feed? I'm slowly moving into that direction, Rob. Rod, we'll have to chat about that. I think Rod loves individual stocks, but we will see. We will see. Great live, Lisa. Thank you. Okay. So Nightbot wasn't working for months, and now it's working today. I got it back reconnected. So, all right then. We are coming up on an hour. If you guys don't have any questions, I'm going to be wrapping it up. But please let me know what your thoughts are on how you are going to be navigating the next few months. Do you have extra in your budget? Are you going to find extra in your budget in order to build up positions that you've been wanting to focus on? And someone sent me a Cash App. I don't know if you want to be publicly acknowledged, but thank you so much. I appreciate that so much. So, Stock Talk David, need a heavy mix of both stocks and ETF, but do what's best for your portfolio. Great conversation. Thank you, David. Yeah, Lisa, we will chat. Okay. I'm slowly moving into that direction. Okay. Selling covered calls has freed up some cash for these times, all right? So David is able to do that. I don't trade out of my, accounts over at Fidelity, and that's where I have my retirement accounts, and my larger accounts are there. So I don't do covered calls. I do regular options trades. I have started to do only once or twice so far, still in that practice stage of doing the verticals. But yeah, I'm open to it. I would say I'm a person that does a little bit of everything, but I would categorize myself as about 95% investor, very small percentage when it comes to trading. Um, but your content has been a big influence on me moving to ETFs. Okay, Rod, thank you for sharing that. Okay. So guys, yes, I know it's another tough time. We already went through a long stretch at the beginning of this year. We started off strong. My videos at the end of 2024 was, we hit all time highs, even going into like the first couple of weeks in January. Bitcoin, the way it was shooting up from November at the election and going into, 2025, things were really thriving. And then, we had all of this drama these last few months leading up to Liberation Day last month, and all this tariff news and all the ups and downs. And now we're going to be in it again. But I know it's hard to deal with. It's hard to see, especially the larger the portfolio, the bigger the drop that you're going to have to be looking at, tens of thousands potentially, depending on the size of your portfolio. But we have to think long term. If you're, whatever your age is retirement tomorrow? Is it right around the corner? Then you need to be, getting yourself prepared for that. If not, we have to be ready and say, hey, we have another 20 years, 30 years or so to build here, and not be shaken out of our good positions, and be ready to potentially invest more during the hard times, if we can, because like I said, I understand we're being impacted in so many different ways, where our groceries and our car insurance and other things are going to go up. So you may not be able to create that balance of additional investing, but hold on to the investments that you have. If you can, add more good, sound investments, not anything that we're going to lose money on. Remember that you can use a stop loss. Do not think about, I can lose my entire investment. If you're investing into something and you're letting it go to zero, it's because you're not using the abilities, and you're not being mindful and taking advantage of the position that we are in now in 2025. Whether it's my Fidelity account or it's my account over at Webull, everything is right here at my fingertips. Uh, I can call up these places. I can get the direction that I need. I already know how to navigate my different brokerages very well. And yeah, I'm an investor. I don't use that phrase on my channel over here of invest what you're willing to lose. I am not willing to lose any significant amount. I do understand that investing comes with risk, and I'm going to make sure to mitigate my risk and make a plan that works for me. And if I have to cut my losses, because I am apprehensive if a particular investment is going to recover and rebound, then I just have to cut it. Because I'm not going to be here 50, 60, 70, 80% down and then stuck diamond handing something, because that was not my intention, especially something that does not come back up. So that's it. Just had to bring some politics into today's show, but just another week of me just trying to give you continued encouragement. No matter what is going on, don't stop investing. Don't be intimidated. Don't ever be shaken out of your good positions. Even when it comes to, those home repairs and things that might come up, please try to do everything you can to not tap into your 401k and look at that as your emergency funds. Work on having a true emergency fund so those investments can stay invested in building and growing, because that is our intention, to create a better retirement for ourselves, or uh, education for our children. So let's keep those investments in place. So buy hood stock. Gabe is sharing. I don't have any hood stock, but hood coin, what's going on. A lot of people have those stocks have thrived because more retail investors are becoming open to it and needing those platforms in order to get started. But I do a mix of things. I do the taxable accounts, but I always like to share that I most definitely do have retirement, and that is my top priority. I wouldn't be doing additional accounts for early retirement if my true retirement wasn't on track. So I also wouldn't be investing for my daughter or doing anything outside of making sure that my retirement is on track. So Danielle, you just subscribed to the channel, or you just got to the live? Did you just subscribe today? Let me know. So guys, I'm going to wrap up today. We're coming up on an hour, and I actually have some work that I need to take care of that I usually do on Sunday mornings, but I wasn't able to. But thank you guys so much for tuning in. Thank you again to Vincent for the super chat. I appreciate you being the sponsor of today's live stream, as well as the person I'm going to let remain anonymous that sent me a $20 Cash App. I greatly appreciate that. I'm not saying your name because I don't know that you wanted to be acknowledged, but please know that I received it, I see it, and I appreciate your support and contribution to today's live. And I will see you guys next week. I'm live every Sunday, 3 p.m. Eastern Standard Time. And you can also catch me throughout the week, different videos on IG. And over on Keenan Grace's Discord, also, I am a crown trader. I have a channel there. So I am always over there sharing information on a regular basis also. So I will put, maybe it's in there already, but my link for joining the Discord is also something that you can have access to in my video descriptions as well as my live descriptions. So thanks for tuning in, and I will see you guys next week.